sorry, Chuck had said, as you know, I just purchased the blueprint and some of the videos. I'm working my way through them. Done a couple married puts and they are working out well. But I want to add some credit spreads. There's a couple of credit spreads, ratio credit spread, bear call credit spread that are income methods in the blueprint. The condor and of course, broken wing butterfly buzzword I just mentioned is also in there as well. Now he says this may not be a question you want to answer for blueprint owners, but anyway, we're going to do a little bit of discussion here. He says if you were sitting down to put on a married put with a credit spread for income, where would you start? Okay, now, also he adds, would you look for a suitable candidate for a married put first and look for a credit spread that blends with it? Yes. He says, or would you select a credit spread that meets your requirements and then hook in a married put? And the answer is no. Let's talk about why. The blueprint approach, let me go back. What we're talking about here is the married put structure that we prefer to use as a proper married put, where we're buying a stock and we're buying a far out in time put that's deep in the money to give us a single digit protection. Really deflates the volatility in the market against your portfolio. But I'm not buying an at the money option month by month by month or an out of the money option month by month by month. That's throwing money away. You're going to see a webinar on that soon. Going in the money and going far out in time takes advantage of three different structures. The at the money bell curve, of course, the time value decay line. It puts time on our side and it allows us to use the put as a second instrument if we want to. It's a second asset. It doesn't go to zero. And we're not expecting it to go to zero. We're expecting it to fluctuate with the at the money bell curve and of course see less time decay than buying shorter term. When I open a married put position, it's because, are many of mine even here anymore? I'm probably going to use Ally because this is probably the next married put I'm going to look at, but not sure if I'm going to go out to January. Anyway, when I look at a married put position, it's because I have an expectation that the next 20 to 60 days or so, 30 to 60 days, the stock has the potential to move up 3 to 5%. Using what? Using some of those technical indicators, MACD, and other things we just discussed. A bear call, and then of course, the blueprint discusses, 12 different income methods that I can use against the position to lower this initial at risk, potentially cancel all of the risk while getting income and increasing the return. For Ally, I'm going to look at the search by symbol tool. I was looking at this the other day. I want to come closer into September, which is 182 days out. The stock's at 45.21. Had this weird 46 strike, and the risk was not this high. I was thinking about the 46 right at the money, but we're going to use the 50 for a 6.6% risk, $350. So I'm buying stock at 45.21. Buying the 50 put for about $8. We're going to have a cost basis of $53.51. I would do this because I have the expectation that Ally is going to move up 3 to 5% the next 20 to 50 days, 20 to 30 days, and I'm going to look for an income method. The 12 income methods discussed, 4 of the 12 actually relate to managing or adjusting my second asset, the put option. The others relate to generating income, doing riskless spreads, credit spreads or ratio spreads inside this nested trade. And that's kind of what Chuck was asking. Do I look for a credit spread first, a bear call credit spread first? Let's say income method number 6, a bear call spread that's out of the money. Or do I look for the married put and then nest it in? My answer has to be I'm looking for a married put. Because normally if you look at a bear call credit spread, you look for a stock that's declining in price, still has the probability that you want, and gives you a good net credit. But the bulk of this structure, even though I'm trying to force a nested spread trade inside of this, is bullish. I have a positive delta here. My put's only at a delta of 0.55 or 0.6. So I still have positive delta profit to the upside. That's why I'm finding the married put first, using the search tools and power options. Do I ever use an income method number 6 right away, even if I have a stock that has weekly options? No, because I'm not going to like the structure. So we know what my cost basis is. Ally does not offer weekly options, so let's just go to April. And anytime you sell a call in this structure, because remember, my cost basis is now up to 53.18 from the stock and the put combination, but I always want to be selling a call at or above the put strike price. So in this case, I might do a 50 and a 55 for a 30-cent net credit. Okay. So we get about okay, let's just call it 45 cents and 10. Okay, nice 35-cent net credit. Does it give me the profit and loss chart I want? Well, sort of. I only reduced my risk down to 5.4%. Not really great. A lot of times when you do this, you see this position go into a double loss zone, like this. I don't want that. I don't want two ways to lose on this position. What I want to do, Chuck, is not force myself into an income method in the right away. And never, I personally never open a married put and say, if the stock goes up 3 points, I'm going to do an income method number 6. No, I let the stock move as I want. Then I use the SIGA model and the blueprint to decide which income method best suits my new expectations going forward. I never try to do it right away because I may not like the position. Comment comes in. Why not sell it below the put strike price? Because even though this little bear call spread nested in the married put, it's a riskless spread trade. I don't have to put up any margin because my broker just sees this as a covered call with an extra long call position. I don't have to put up the margin for the bear call, the difference in strike prices. However, I do have a capped gain, then a pullback as the stock moves above it. Why am I not selling, hey, let's do a 47.49. Let's do a 2-point spread, get more than this 35-cent net credit. Let's take a look. 47 at $1.15-ish. 49 at 55. We're probably going to, okay, 60. So we're getting closer to 50 or 60 cents. Not quite double the 35 cents. I could use a wider strike if I wanted to. Is this going to give me the structure that I want? No. Without even looking, I know it's not. It's going to double dip because when you sell a call, even with an income method number 6 that leaves the upside open, you sell that call below your put strike price, you're actually creating a bearish position. Let's take out the extra long call. Let's say that I bought this stock, bought this put, had that 6.6% risk I saw and said, hey, I can sell this April 47 call right now and get $1.20. All right, let's just call it $1.20. We wouldn't, but let's just call it $1.20 and cancel almost a third of my risk right away, a little bit more. What was my original expectation? My original expectation was that Ally would move up 3 to 5% within the next 20 to 30 days. How does this help me? By selling this call right now, did I reduce the risk? Not exactly. I did reduce the risk to the downside, but because I sold the call, even with income method number 6, Chuck, even in the construct of the riskless spread trade, where I don't have to put up the margin, it doesn't add to my risk, selling the call too low to get a good premium potentially increases the risk to the upside. I've increased my risk from 6% to 9.6% if the stock has a run that I've expected and continues to move up in price. Okay. And with income method number 6, even though I leave the upside open, you saw that you get that position. I'm sorry, 49. You saw you had that position where we double dip into a loss range. So now I've got this range to lose on this trade and this range down here to lose on the trade. Profit only here if it's really beyond my expectations at 53, 54, and 55. So I wouldn't look for that second way you mentioned, Chuck, of looking for a bear call credit spread first that has the criteria that I want and nest a married put in it, because when I look for a bear call, I'm looking for something completely different. I want to stay with my bullish structure, the stocks that match my bullish structure. And if I do want to use that income method number 6, one of the other nested spread trades talked about in the blueprint, 5, 11, 8 perhaps, I'm going to wait for the stock to do what I expected to do and get the better premium rather than trying to force it now for 20 or 30 cents or force a position for a higher net credit in that case that actually gives me 2 ways to lose. to the downside, that heartbeat with the income method number 6 that dips back down into loss range, I'd rather leave that to the upside for now. Then if the stock hits my expectations, move on from there. That's essentially what I told Chuck in the email. I just wanted to give a quick visual here. We're going to expand on that later on for Blueprint owners sometime in the next 2 weeks. I don't know if I'll get to it next week. I've got I think 3 or 4 other requested videos and projects working on right now. We're going to get those out next week in addition to the segments from today's presentation as well, related to that. But we'll post this one there, and we'll get that up for Blueprint owners and Fusion subscribers sometime in the near future, as well as the stock selection process for Bill, who asked me about that a week and a half ago, maybe 2 weeks ago, if I'm not mistaken. It might have been 16 days ago. So at radioactivetrading.com, if you're a Fusion subscriber or if you're a Blueprint owner, if you're a Blueprint owner, you can log on using an assigned password, and you'll have access to the Blueprint owners only webinars, latest Blueprint revisions, and upgrades as well. Fusion is a separate service from Power Options. Common approach is an investor who buys a Blueprint, and after going through the Blueprint for a few weeks, they'll be able to get a discounted first month of Fusion for only $10 as a Blueprint owner, a new Blueprint owner, of course. And what they'll end up doing is possibly following Fusion for a couple or a few months. What is available on Fusion? Well, there's a series of lessons to help you master the techniques in the Blueprint that are there. So there's timed lessons that are sort of on a drip content fashion, and it goes through to sort of solidify some of the basics here: open and close track records, trade simulator tool, using Fusion to find new possible trades, and so forth. And then it gets in some of the specifics. Income method number 1, for example, going through different discussions on the income methods. Similar material to what's in the Blueprint, just different examples, different presentations, a few extra discussions in there as well. So a Fusion subscriber gets access to the Fusion lessons, the open trades and trade tracker, where of course Ernie and I post our Fusion positions as we manage and roll those positions as well. I had mentioned the 2 that we had opened recently. Barry was in there, of course, and MAS. The RPM report, this is very similar to what's on Power Options for searching for married puts. It's using the same criteria that's on the Radioactive Trading default screen. It looks like the API is having an issue interacting with our search tool right now. So essentially what it's doing is reading the same search criteria you have for the default Radioactive screen on Power Options under the married put, Fernando. It doesn't give you the ability to adjust the criteria as you have it there, but you can see sort of the same positions we were looking at. There's Ally, there's American Express, there's Comcast, very similar ones. In addition to that, the stock insurance tool, so you can look for puts that match your, that if you have a stock that's up, you can see puts that would give you a good locked-in profit. And then there's a series of members-only white papers and videos for Fusion subscribers only, as well as the Blueprint owners ones that are there. Some of them are duplicated. That example for DAR that we did with the income method number 6 going into earnings that hit expiration today, put that video together there for both Fusion subscribers and for Blueprint owners, to both have access to that current video right now as well. And that's essentially it. That's the basic review of what's available in Fusion and the tools that are there for the Fusion subscribers. That's a separate subscription, remember, of course, from Power Options, a separate subscription cost, I should say. So they're 2 different subscriptions that are not linked right now in any way, shape, or form, Fernando. So that's just a quick review of what's on Fusion.